The American consumers aren't feeling very great. They've been feeling pretty bad about everything from prices to the stock market. The University of Michigan's Index of Consumer Sentiment was stuck at one of its worst readings on record in June and May. This after plunging nearly 29% the first 4 months of 2025. And over the 79 years of the survey, a drop this large and this fast has almost always predicted a recession. The sentiment readings improved slightly at the start of June, but still they indicate that Americans expect much higher prices and a much slower economy in the coming year. Now, Joanne HSU, the director of the University of Michigan's Survey of Consumers, has said that it's dangerous to overlook such negative consumer sentiment. But that's exactly what Wall Street's been doing. The so-called soft indicators remain low, while hard economic data like jobs are mostly holding up. As a result, stocks have roared back from April's lows. And this is where the catch is. The University of Michigan survey is rarely wrong. For example, in 1974, the survey spotted the worst recession since the Second World War, even as economics predicted otherwise. Now, back then, ever-rising sales of TVs, cars and other consumer goods were tricking the economists into thinking that things were pretty okay. While investors continue to go wild, pushing stock indices to new records, U.S. consumer spending has grown at its weakest pace since the onset of the COVID-19 pandemic. And this is mostly driven by a sharp deceleration in outlays for a variety of services. Spending on services contributed 0.3 percentage points to gross domestic product in the first 3 months of the year. Now, this is in fact the least since the second quarter of 2020 and is down sharply from a previously reported 0.79 point boost. As a result, the GDP has declined at a downwardly revised 0.5% annualized rate in the March quarter. The numbers indicate the economy's woes early in the year weren't entirely related to the deterioration in the trade balance related to Trump's tariffs. There's likely more at work, and it gets worse. Recurring applications for U.S. jobless benefits have risen to the highest level since November 2021, extending a sharp increase over the past month and a half, and that also signals more people are staying out of work for a lot longer.